What's going on, guys? This is the DeFi Crypto Alliance show where we're doing our best to be the bridge between our fellow entrepreneurs and real estate investors and the cryptocurrency world, where we feel like that is the biggest opportunity over the next few years. So, welcome. We're glad to have you along. Corey, take it away.
Absolutely, Corey Geary here, and I'm just truly blessed to be on all this journey with all you guys, where we're using cryptocurrency as that wealth creation tool, and then you're using real estate as a wealth preservation tool, and just trying to navigate through this bloody bear market where like literally everything is just getting demolished. But this is the time to really sit back. If you still have some dry powder, obviously DCA. If not, that's fine. Hold through the blood, because selling down here would not be, I don't think it's going to bode well in the future. But man, it has been some rocky times, and it started obviously with the SEC for our ecosystem, but now it's continuing. And I think it's because Bitcoin has lost its support and it's been getting hammered. Ethereum's been getting hammered, and so is all the other alts in the layer ones. And so, now we're an effect of that. We're playing off that. But man, this is the time. I think if you were to ask me, this would be towards the end. And obviously I don't give any financial advice, but for me, I feel like we're kind of in the last of the marathon of the bear market, where this could be the bloodiest time. We don't know. I mean, there's people calling that Bitcoin can go down to 11K. I mean, I don't know. That's what we thought last time, and it hit 15, then bounced back up. We'll see. It could definitely go and do a double bottom. Who knows? Or maybe it just goes down to 27 and bounces from there. We just got to see. But I do feel like we are kind of in the last stage of this bloody bear. I feel like there will be some news that will come around, towards the end of the year. We got the presidential election. We've talked about that a lot. I think they might do one more interest rate hike at that point. There will be a pivot. Now, I would say, guys, when there is a pivot, you're going to want to keep your eyes out and peeled, because a pivot usually, and we talked about this on yesterday's show. And if you guys didn't watch yesterday's show, go back and watch it. It was absolute fire. It was talking about the whole Fed interest rates macro, and where we think maybe the economy could or could not go next year. But obviously, I think every time, I'm not sure if there's been a time that's been different, but I think every single time when the Fed pivots, that's when you see the stock market crash and the recession come. It crashes pretty fast, if you look at the charts, it's almost like a V shape on the chart. Now, those are like monthly candles, but still, we would crash down within a few months, and then we'd bounce kind of back out of it, and it'd be a lot of pain for a few months, but then it would be back to a recovery. With the new presidential elections, they would turn the money printers back on. As soon as that happens, those money printers go burr, and there's a lot of liquidity that comes into the marketplace. And so it'd be interesting to see. And these are all just speculative things that we're just trying to think through. We don't know if any of these are going to play out, and something completely opposite could happen.
Right. Red Squirrel says, dry powder, what's that?
Oh, you got that right. I'm with you, Red Squirrel. We still have money coming in every single month. Obviously, I'm sure most of you guys do too, but it's like, me and Dane were talking about this before the show. It's like, okay, if you keep DCAing, we don't know where the bottom is at. It's it's rough to DCA when you don't know where the bottom is at. And you can obviously break up your DCA into small little chunks to try to help preserve the capital, just in case the bottom were to fall through the floor. But it makes it tough to go, okay, what do I put it in here? Is 4 zeros and a 4 for Pulse the bottom? I don't know. It's because obviously I would rather. So I'm a big advocate of DCA, and DCA has really got my cost average down tremendously in the ecosystem as a whole. Because obviously most of you guys know I came in to the Pulse Chain ecosystem towards the top and started buying Hex at freaking 38 cents. So DCA has done wonders on bringing that cost basis down. But it's like, man, I almost at this point, tossing ideas around where, okay, if I stop my DCA here, and then let's just say 4 zeros and a 4 was the bottom, and it starts ripping, and we hit 4 zeros and a 6 or 4 zeros and an 8, and we start, create a new support line. Like, I'm okay DCAing there too, because like, at least I know that the bottom was probably in. I mean, there's obviously more stuff that can come out in the future that can create another bottom or go lower, but like, that would give me more surety. Or maybe, we're sitting at 4 zeros and a 4, and it crashes down to 4 zeros and a 2. And then it comes back up at a 4 zeros and a 4, and creates some support, and it starts climbing upward. And then, like, I would look like a bottom, and I would feel more confident in DCA in there, knowing that I probably avoided the falling knife. So it's hard to kind of, where do you place your bets with the last bit of dry powder you have?
Well, and I think the thing that I keep considering, so, you want to make sure that during a bear market, you're learning the things that you think will serve you the best in the bull, right? And one of the things that I've been digging into more recently over the last few months is just market sentiment in general and where we're headed, trying to figure out, why price is doing what it's doing. And here's the facts: is nobody knows why price is doing what it's doing. It's funny how many people have said that there was going to be certain bottoms and certain tops, and the fact is we just keep going lower. And I think that, frankly, until I think you have to have Bitcoin and you have to have Ethereum go higher, there's no reason for anything to go up right now, at least not sustainably. You could see short-term pumps, like we've seen a lot of. We've seen some memes take off, but it's just people rotating money around. There's not really much new money coming in. And so until there's reason, in my opinion, and I'm pretty well fully deployed at this point. I don't have any dry powder sitting on the sidelines. I've been buying, and it could, and my portfolio is in relatively decent shape because I've been DCAing, so that's good. But man, until there's a reason for for the markets to be able to go up and to hold higher price points, I just can't think of a great reason to look to buy with any additional dry powder that I have right now. Now, other people disagree, and I think that's fine, but how many dips can you buy before you're all dipped out? Therein is the question for everybody. And so it's interesting to consider, but that's kind of where I'm at right now. Is I'm like, man, until market sentiment as a whole for crypto turns around, I think we see lower price points, and it continues to be seen. I mean, it's funny how many people, and I bought this all day long before Pulse launched, where people were like, why would people sell at a loss? Like, price would never dip below sacrifice prices because people just won't sell at a loss. Well, people have been selling at a loss all day long since.
I have an answer for that.
Yeah, go ahead.
Yeah. Because they're still not selling at a loss. These guys were up multiple hundreds of X's on their hex that they sacrificed. They're still pulling out economic energy at the top of the last bull market. They're still pulling out energy out of that chart. It's like they took a time machine, went back onto the chart where the big top was at. Maybe it's a little bit more, and they are able to extract energy from that standpoint, even though they're underwater, right, technically from the sacrifice price or whatever it may be. But how many Hexicans or OGs or whoever were able to sacrifice multiple hundreds of X's of hex? And so they're still pulling out that economic energy, and that's what's happening. Now, I think a lot of it is, this is why I think we went down this low. I don't know if we go lower. We might. I think we could. And this will be, but this is the reasoning, I believe, why we've gotten down to here and why we might even go lower is because of that, because people still are up tremendously from that last run. They preserved their economic energy in the sacrifice, and they were able to take it off the table. Remember the narrative when we were waiting for the launch? Everyone's like, oh, you were able to sacrifice all your coins and preserve the value at 30 cents. or you preserve the value at 40 cents. We heard that narrative so many times when Hex was dropping. Well, it works the other way.
Right. Right.
And that's what we're seeing, and that's what's happening. And until some of these bigger whales feel a little bit of pain from that, that's where the bottom will be. That's just how it works, because this sacrifice, it happened in the middle of a bull market. So we're time traveling back to that standpoint, and we have to go through the pain all over again. Or maybe we went through it. I don't know. I don't know where bottom is at, guys. I'm not trying to call bottom. I hope this is bottom. It could be, but that is why we got to this point. I firmly believe that. I firmly believe that. And that's why we could go lower.
Well, but even, and I think that's a really valid point. I think that's important to understand that, yeah. And a lot of the bigger players are still way up. Just like you're saying, if you rode the Hex wave and you sacrifice, you really took a very illiquid asset and you sacrifice it for something that's far more liquid, and now you can get out, if you wanted to. Now, also, there's been a lot of people selling at losses. You and I are both in Telegram groups where it tracks the wallets and sees what they're doing. There's plenty of people selling at a loss, and frankly, I think with seeing that type of behavior, you could see whales also selling at losses, theoretical losses also. So yeah, nobody knows where the bottom is going to be since we broke that 4 zeros and a 4 on Pulse. And so I am pretty contented waiting patiently. One of the comments that I saw on Twitter that I thought was good, you see some of the people that are like, oh, lower lows, let's go, I'm buying it up. Well, the lower we go, you also have to readjust your top of where you think the market is going to head to also. And so, it's an interesting balance to be able to weigh how you want to build your portfolio and what you're willing to do with your money. And so, yeah, so
there's two caveats. There's two sides of the coin.
Yeah.
For that, because then people are out there wanting their 1000x. Maybe they might get it, but it's going to be from the lowest point of the price chart, not Pulse at sacrifice price.
No.
Because then they're still getting the 30x or 50x that people have been realistically saying since launch day. And so that could still very easily play out. But it does remove a lot of economic energy, a lot of whales, and it gives the capability of price running really hard when it does finally come time. So it'll be interesting to see. Yeah, there's definitely two sides of that coin. Yeah, and then you'll have whales buying back in, maybe trying to get their bags back if we start popping. We just need a couple weeks of green candles, but man, it doesn't look like that's anywhere in sight.
No, agreed.
Yeah.
Now, one positive note, Bitcoin is it hasn't broken. It's we haven't seen a lower low. It's holding, essentially to see a lower low to look at break some of this some of these levels. It's got to fall. What is that? Below about 24 and some change, 24,000 and some change. It hasn't broken that. And so it'll be really interesting to see, does it break that trend or does it continue to use that as support and head upward? I'm really curious to see. There's some people that think that we'll see a really strong move this year still, Bitcoin, and others that, are just waiting around, waiting to see. So, yeah, we'll see if it holds that trend or not.
Yeah, it'll be interesting to see, man. I'm still in the camp that we're going to see something to what we had talked about yesterday on our show. I love that video of Colin Talks Crypto, and I really feel, that's a very high probability.
Agreed. I agreed. So if you guys didn't see yesterday's show, go back and watch it. That was one of our better ones, in my opinion. That was good.
Yeah.
Yeah, this is cool. So we've got some third-party protocols that'll be launching here, which will be great. I think once again, though, I think the problem maybe that's the wrong word, problem, but I think one of the significant uphill battles that any new protocol that launches right now that they have to fight is there's just not, there's just not things in the crypto sphere to indicate that there's sustained bullishness currently. So, we've seen that with most protocols that have launched. We've seen that some excitement, we've seen a pump, and then they dribble off just like Pulse Chain, and everybody's waiting for the crypto markets as a whole just to get more momentum. So, yeah, we're just hanging out. But I'm really excited. Yeah, things like Tetra will be are things we're excited for. Fiat sounds like they're almost done getting feedback and going back and forth with the auditors for their Oracle. So that should be launching relatively soon. Fame should launch relatively. I mean, there's a lot of things that could launch relatively soon. But the other thing to weigh, because once again, like if you're somebody that has a protocol that you could launch in the near future, what are you waiting for? I mean, frankly, once again, I'd be waiting for markets as a whole to start getting more positive to launch. Like I would be holding off, in my personal opinion, to have a chart that would actually sustainably look to go up, this year or next.
Yeah, everything kind of follows the law of memes right now because we are in a bear market. You just have those 6 days of it, and then it is kind of, and then it never recovers back to its glory because there's just no liquidity to keep it going. Yeah, that's the problem that we're having, and it's everywhere.
It's everywhere, right? Right. So the question is, yeah, what do you do at this point, Corey? Are you de-risking? Are you, what are you doing? I'm
No,
curious.
I'm not taking any money off the table because it's like the time to do that was, the law of memes. If you were going to de-risk in Pulse Chain, I feel like the best time to do it was the law of meme coins because they all seem like they all follow this. The 6-day pump going in, Pulse did like a 3x out of the gate. It brought up Pulse X to where it was like even to sacrifice price because Pulse X launched at a much lower cost basis than Pulse. And that would have been a good time to take some chips off the table. And a lot of people that we knew did. And they preserved a lot of capital to come in and buy back lower. And it was interesting because they were right. And we just don't know how lower we're going to go. But that, to me, that was kind of the time, because right now, if I were to try to de-risk, then I feel like once again, I'm trying to call the bottom or call I'm trying to call, because I'm saying, oh, we're going to go lower when I don't know that. I have no clue if we're going to go lower, and I have no clue if this is the bottom, or I just don't know where we're at on our price chart. And so like it's like either one of those decisions that you do, you're saying, hey, yeah, you're admitting that either we're going to go lower, or you're admitting that, oh, this is the bottom. It's like you don't know,
Right?
So it's tough, right? Now, obviously, depending on everyone's financial situation is so different, right? Like if somebody kind of over leveraged themselves and they need that money to because maybe some people thought like we were going to do it. Cause I mean, you heard it, like we were going to do 100X in 90 days. Like, oh my God. Like, and if people were thinking that, obviously people would have over leveraged themselves trying to get that 100X in a 90-day period. And then, so for those people, if they can't pay their mortgage, if they can't put food on the table, maybe it's, they haven't paid their bills in the last couple of months because they thought they were going to be able to cash some money out on 100X. Those guys, there's a lot of them. It's just they're everywhere, and that's why they're so painful right now. Those guys, man, if it comes down to putting food on your table, or paying the mortgage, or catching up on your bills, or continuing crypto, you better do what's right for your family.
Right.
That's a fact. That's where you have to de-risk. There's where you have to. But if you stuck to your, what you're supposed to do and not put more than you're supposed to do, I mean, even me and you, Dave, we put a lot in, like a lot, like, but it's still, I can still afford to feed my family. I'm affording living here in Arizona and Puerto Rico, and I'm affording it just fine. No issues. I got money in the bank. I still got money in the bank. You know, we got some money coming in on the monthly, and I'm okay. Like it sucks. We did put a lot of money in, and we're down that money. But you know, at the same time, it's I didn't go over where I need to like go take a loan out from just to pay an extra, you know, a second loan from my mortgage or something like
Sure.
you know, there's a lot of people who did that, and it's like it's such a that's a problem because like everyone's financial situation is so different, and
Right.
where their risk assessment and where they should be like de-risking is going to be it's specific to that individual. And so it's a very interesting question and an interesting thought process that everyone has to think through for themselves. And don't listen to anybody on the freaking YouTube or the internet because no one knows crap.
Agreed. That's the truth, is nobody knows.
Oh, no one knows crap. So right now I'm just chilling, hanging out, you know. I don't know a better answer for that. But every single person has to think that through themselves. Where are they okay where they're at economically? Right. You know, a lot of people do have 9-to-5s, you know, and so like they're bringing in a paycheck every 2 weeks, and hopefully that's enough to cover the monthly nut, you know. And so I hope so, and maybe they don't have to touch their crypto. I don't know, but it's it's a tough question, man. Because the people, man, and that's the thing, man. God, and I'll tell you, that's one lesson I've learned, Dane. Being in this bear market, when we first got into Hex, we bought into the narrative of the whole staking 5555, buying the narrative of like, you know, Hex is bear market proof, all this. And I love Hex, guys. Don't get me wrong. I'm not trying to talk down on Hex at all. These narratives they're false narratives that the community pitches to try to get you to be their exit liquidity. This is what happens, right? And we fell for that. And then like we fell for like the Pulse Chain's launching. It's 2 years in the making. It's pent up demand. It's going to do a 10x right out of the gate, and then we're going to be 100x by 90 days, and like that. And everyone in the community is screaming it. Everyone in the community is screaming it. And once again, another narrative that was completely wrong and backwards, and you know, so it's interesting, you know, these narratives that we fall into, or we tend to believe. And they like, I believed when Pulse launched that they could never go under. I would have never imagined it would go under sacrifice price.
No,
I would have called you crazy.
Certainly not the 4 zeros and a 4, and here we are. Yeah, 4 zeros and a 389. It's pretty wild.
Yeah, I would have called you crazy, but here we are. And so like it's, you know, it's interesting. And it's all about, I know a big part of this is where we're at in the market cycle, where we're at in the macro. Macro, you know, I don't know if you guys have ever heard the saying, don't bet against the Fed. It's a saying in the stock market world. Don't bet against the Fed, where if they're raising interest rates and doing what they're, you know, you don't go and buy risk on. You don't bet against the Fed. Well, crypto is no different. And so it's just, you know, I think that plays the biggest part of all this. And so there are some definite lessons to don't fade the Fed, don't fade the macro. Macro is responsible for everything, guys. It's down to the groceries you buy at the store. Right? If you're paying triple for a loaf of bread, that's because of what's going on in the macro, right? With the Fed and the money printing, or the raising of interest rates, whatever. And so like everything's affected by that, whether it's affected later down the road or in the short term. And I think that's probably one of my biggest lessons in this is to wait. Yeah, I should have waited for the bulk of my liquidity, probably towards the end of where we're at right now. I feel like we are in the end of that bear market cycle, but right now the end of this is looking pretty bad. Like I wish I'd have had all my liquidity from 6 months ago. Oh my God, I could take that liquidity and put it in now. Oh, I'd be a freaking shark in Pulse Chain.
Oh yeah, you have an enormous position.
I would be a shark. Like,
Right.
and so it was, yeah. So those are lessons learned there. Big lessons. You know, the SEC stuff, that's just part of the bear market for me. It's what happens every market cycle. There's all this crap that comes out every bear market that kind of like beats up that it plays along with the cycle. And so that part was just, I should have been more in tune to, when we do talk about the macro all the time, we do talk about it. And maybe that's why I didn't go get a leverage against my house to put it into Pulse, because I knew in the back of my head that macro still sucks. And that's why I still can't afford to feed my family. Right. And I because I knew macro sucked, I needed to have some money for macro.
Right.
So it's like, it's interesting.
It is.
Like one should do a lot of inner perspective and try to learn from all this. And not saying like give up on crypto. I think crypto is great. Crypto is still going to be it's going to be the biggest opportunity, in my opinion, that we're going to see. But there's just a different way we could have played the game.
Yeah.
That's all.
I would be a lot more patient.
That's all. Right. Oh my God, the patience, man. That is such a lot more patience. I mean, how many times did you say, Dane? And I give you credit for this because you talked about it on our show multiple times. You talked about it, you're like, because you pull all kind of data points saying those 90 days when you see the kind of the bottoms in for these layer ones. And you had showed many different price charts or different data points showing that, it took a while after a launch before the bottom was in and before it started pumping. And so,
in fact, if you would have waited 90 days like we talked about, you'd be buying pretty freaking close to where pricing is at right now.
Oh, it had been phenomenal, and you would have been right on cue. And so it kind of sucks that, like, even though you found the data points and talked about the data points and blah, 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 like I didn't listen enough and go, okay, I should hold. I mean, it's okay to DCA in and kind of build a position, but like I should have listened a little more where I could have moved that economic energy more to the 90-day point and captured more of this, these lower these price levels. I would love to have the economic energy I had 6 months ago right now. I mean, it would be
absolutely
amazing.
The part of the plan that was hard that threw things off is the starting price, because we all thought that the price would start at like a 5 or a 10x above the sacrifice price, and that was the hard thing for me. Is I was like, wow, pricing feels, compared to what my expectations were, pricing right now feels good, and just need to be a little bit more patient. So I'm with you. My plan is to kind of hang out and just hold. I like the positions all in all and the things that I hold.
Yeah, me too.
I like being a shark in most everything that I like. That's generally my goal. And so, I like how I'm positioned in that respect. Just in dollar terms, it sucks right now.
Yeah.
So being more patient. Yeah,
exactly. But that's why I like the sea creature measuring system because it does tell you, like, for example, if you're a shark in fiat, right? It gives you a good indicator if that particular coin or ecosystem were to go to the moon. Like, it gives you a good you're going to be like in really good shape. Like, you are going to be well taken care of because what amount of supply you own in the ecosystem. So that's why I really like the measuring of the sea creatures, because it gives you an idea of, like, if this thing really effing rips, where am I going to be sitting at? And that's what it does.
Agreed. So as far as so lesson number 1, we've talked about at great length, is to be more patient. Yeah, it's interesting, even with a lot of the hype and things, and until the market as a whole shows reason for pricing to go up as a whole, seeing the market and the macro looking stronger, there's just not, in my opinion, we'll continue to see bleeding and lower lows. And this is a good question. Yeah, thoughts on macro September, November, seeing several issues starting to build, narratives, FUD. Yeah, I mean, I think that there's a lot of talk about September being, August and September tend to be two of the worst crypto months, generally speaking. And so there's a lot of talk of like the potential one flushing out next month. And I would say in Pulse chain terms, we're seeing it right now. We're seeing it here in August. But yeah, I mean, does that actually occur? I don't know. I wouldn't be surprised at all if the market's kind of just hung out where we're at. I don't think that we need to see a ton of volatility to the up or the downside in the short term. I wouldn't be surprised if markets just kind of hung hung out. You have the ETFs that the Fed needs to make a decision on. One of the decisions they can make is delaying their decision. Uh,
They're
and
good at
they,
that.
yeah, they're good at that. They need to make that, if I'm not mistaken, within like the next 10 days or so. So, I mean, I think that's the next narrative for crypto as a whole. Of course, if they're approved, I think that's really bullish for crypto markets as a whole. I don't think that's the most likely scenario. I think the more likely scenario is that they push off those decisions, they get delayed, and we're kind of just hanging out. I'm seeing some volatility, potentially some more bleeding, but I don't think we see a ton of volatility per se to the up or the downside. And then the other is they could go ahead and deny those applications again. I don't think that's super likely. It could, but I don't think that's real likely. You have the likes of BlackRock that seems to control everything in the race now. I think it'll get approved. I think it's just a matter of when.
Yeah, I agree.
Yeah.
I agree. And remember, September 17th ends the Jubilee year.
Oh, okay. Okay. So then we'll
September
be past
17th.
all the okay. So another month, about a little less.
That's the, yep. This whole year has been Jubilee. It's, yeah.
Yep.
We'll see what happens.
The other lesson that I've been considering real heavily was, and I didn't do it much, thank God, but like it's funny for every person that posts one of these meme coin charts and say, "Oh, we're running, I bought clear down here and I'm way up now." For every person that's actually telling the truth on that, there's 10 other people that bought up here, and so that's a lesson that we learned long ago, and not to go and chase charts that are already up very significantly, and continue to hold to, and so we haven't been bitten in the butt with some of that type of stuff, which has been good.
Yeah. Yeah. We've been watching that play out time and time again on Pulse Chain.
Yep, yep, because that's the only thing that's going on right now. It's fascinating to see. The other lesson that I think is really important, I think that for my portfolio, I think it's important to be able to verbalize why I've bought the things that I've bought. Now, my timing might be off, right? My timing might be a little bit off, where I wish I would have been a little bit more patient and waited and bought now instead of a month ago or a few months ago, which is fine. But if I'm still in things I believe in that I think will do well, maybe I don't go and 1000x my money or 100x my money, but I certainly could go get some significant multiples from here, in my opinion. And so I think it's important to be able to verbalize why you bought something, to be able to, and have those things change. What's changed about, for instance, Pulse chain? Like if you bought Pulse, is there anything that's changed in your agenda as to why you bought it, why you might sell? Well, there's nothing that's changed for me other than the price, right? Like the chain is still solid, the bridge hasn't been hacked. I mean, it's the most decentralized blockchain in the history of blockchains.
Still building.
Yeah, scalability. I mean, all of those things still exist. I think it's more just the timing in the markets. It's too bad that the SEC came out when they did, because frankly, I don't think that Richard would have launched still. I think that Richard would have. I think we'd still be waiting for Pulse Chain. I don't think that Richard would have launched until end of this year, maybe even early next. If you even if you wanted to say like 6 months before the Bitcoin halving, which is when he launched Hex, that would be theoretically like November of this year. I think we'd still be waiting. And frankly, I'd be really annoyed about it, but I think it would have been better for all of us than launching when he did. And I think you had to move that up because of the SEC stuff.
Yep.
So, here we are.
That's yep. I agree 100% on that. I think the timing, which is why the macro still sucks, man.
Mm-hmm.
It still sucks.
Mm-hmm. And there's not any positive momentum really going on there right now. It's really odd. I'm telling you, I feel like everybody senses this like looming cloud of something being off, and people just don't know how to respond or act or what to do.
Mm-hmm.
Yeah. So those are some of the lessons I've been thinking of and weighing, and it's been helpful to use those for any continued dry powder that I might inject into the ecosystem, how I might do it. Like I said, with all those lessons being said right now, I'm willing to be patient now. I've made my bets far and away, and I'm comfortable waiting to just see where we're at. I don't need to buy a perfect bottom, but I'd like to see some more strength in the markets as a whole before deploying much more capital. That's my personal opinion. I could be wrong. You got to make your own financial decisions, but that's kind of where my head's at right now.
Hunter, I love it, man. I love it, 100%.
Yep. So cool, Corey. Is there anything else you want to hit on before we jump off today?
Tomorrow we won't be doing our normal YouTube. We have our thing that we're doing. That's an all-day event where we help new onboards with their crypto, specifically in the real estate space. And then we should be back like normal on Thursday.
Yep. So sounds good, guys. Catch us on Thursday, and then Friday's open mic show. So we will see you then.
See you guys.